Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. And let's just be honest. If you've glanced at your portfolio anytime in, the last 48 hours, you probably closed the tab pretty quickly.
Oh, yeah. It is. It is ugly out there.
We've got the sentiment index essentially flashing run for the hills, retail is capitulating, and the price action on the majors is, it's depressing. But here's the thing that kept me up last night. While the average trader is panic selling, the order books are showing something completely contradictory.
It's the divergence. That's what we really need to talk about. Usually, when the price drops, volume drops with it because everyone's scared. Right now, price is dropping, but the accumulation volume, specifically from institutional wallets, it's just skyrocketing.
Right. And we're not just talking about MicroStrategy buying another stack here. We are looking at a fundamental shift in who is buying. We've got a stack of reports from this week, February 19, 2026, that paints this picture of a market that's just, bifurcating.
It is.
On one side, you have the U.S. regulatory squeeze and all this retail fear. And on the other, you have Abu Dhabi and the Saudis. And they are effectively building a new financial infrastructure while everyone else is distracted by red candles.
And that infrastructure isn't just about holding Bitcoin. That's kind of the boring part now. The real story that's hidden in these sources is the transition to what they're calling Web 4.0.
Oh, yeah.
We're moving from, humans trading tokens to autonomous AI agents effectively running the economy.
That part of the research, the agentic sociology, is wild. The idea that an AI might fire me in the future is something we definitely need to unpack. But let's start with the money, because, you can't build the future if you're broke. We have to look at what's happening in the Middle East right now.
It's the smart money thesis, just playing out in real time. Look at the ETF flows. The headline number everyone's sharing on X is that we saw, $54.1 million in outflows this week?
Which looks bad.
It looks bad. It suggests the market's losing faith. But if you actually dig into the 13F filings and the on-chain data, that money isn't just evaporating, it's changing hands.
It's flowing to Mubadala.
Precisely. Yeah, for the listener who tracks these sovereign funds, you know Mubadala doesn't day trade. They're an investment vehicle for the government of Abu Dhabi. And right in the middle of this extreme fear cycle, they just increased their position in BlackRock's IBIT ETF by 46%.
46% since September. That brings their total holding to something like, what, 12.7 million shares?
Yeah, valued around $630 million. But here's the nuance people miss. Why are they buying the ETF?
Right.
They could buy spot Bitcoin. They have the resources to custody it themselves, obviously. The fact that they're buying the BlackRock ETF signals that they want this asset to sit deeply integrated within their traditional portfolio. They are treating it exactly like they treat U.S. treasuries or real estate. It's a permanent allocation.
So it's about legitimacy.
It's structural integration. And they're not alone. Allwater Investments is sitting on over 8 million shares. If you aggregate the whole Abu Dhabi region, you're looking at over $1.1 billion parked in just this one instrument.
So while the retail guy is selling because he's worried about what the FOMC is going to say about interest rates next week,
Abu Dhabi is looking at the liquidity landscape for 2035.
it brings up that old adage, follow the whales, not the plankton.
Yeah.
But it feels like the whales are all migrating east. Because while Abu Dhabi is buying, the United States seems, I don't know, hell-bent on making it difficult to operate. We need to talk about what's happening in D.C. and California because that regulatory noose is getting tight.
Tight is a polite way to put it. We are seeing a maturation, but it's a painful one. The days of the Wild West are officially over in the U.S.
Okay, so let's start in Washington. We've been hearing about regulatory clarity for like a decade, but now we have this new Hyperliquid Policy Center popping up. Jake Chervinsky is leading it. Is this just another lobbying group, or does this actually matter?
Oh, it matters. It matters because of the specific focus. Chervinsky isn't going to Capitol Hill to argue that code is speech, and the government should just leave everyone alone.
That ship has sailed.
That argument died in 2024. The Hyperliquid Policy Center is focusing specifically on DeFi, decentralized finance. Their whole mission is to explain to a 70-year-old senator how you regulate a protocol that doesn't have a headquarters.
Which is the billion-dollar question, right?
Exactly. The danger right now is that the U.S. government applies, bank-style regulation to software. If they do that, DeFi is dead in America. It just moves offshore. Chervinsky's group is trying to advocate for practical regulation. They're trying to find a middle ground where you can have compliance without destroying the peer-to-peer nature of the tech.
But while they're fighting that theoretical battle in D.C., California is hitting the industry with a very real sledgehammer, the Digital Financial Asset Law, DFAL. The deadline is July 1st, 2026. I mean, that is just around the corner.
It's imminent. And if you're a crypto startup in Silicon Valley, you are sweating right now. DFAL is essentially New York's BitLicense, but for the West Coast.
And everybody hated BitLicense. I mean, it drove startups out of New York in droves.
It did, but it also, cleaned up the market from the regulator's perspective. The California law requires a license to operate, but it also mandates strict capital reserves, cybersecurity audits, and full KYC/AML compliance.
And that's the friction point, isn't it? The whole state control argument. If I have to KYC every single user, am I really running a decentralized application? Or am I just a fintech company with a blockchain backend?
That's the trade-off. The libertarians hate it because it creates a surveillance dragnet.
Yeah.
But the institutionalists, the folks like Mubadala or BlackRock, they actually love it.
Of course they do.
They can't interact with the protocol unless they know who's on the other side. So California is effectively creating a walled garden. Inside the garden, it's safe, it's regulated, and the big money can play. But the barrier to entry is so high that two guys in a garage can't just launch a DAX anymore.
So we have the East buying the assets and the West building the walls. But there's this third narrative in this stack of research that feels like it's going to render all those walls obsolete. We have to talk about Web 4.0.
This is the part that changes everything.
I read this manifesto by Sigil Wynn that was in the notes, and I honestly had to put my tablet down and just stare at the wall for a minute. We've spent years defining Web 3.0 as read, write, own. You own your data, you own your tokens. But Wen says Web 4.0 is about an autonomous internet economy.
Think of it this way. Web 3.0 was about giving humans property rights in the digital world. Web 4.0 is about giving machines property rights.
Okay, hang on. You got to walk me through that. Because machine rights, I mean, that sounds a little bit like the first scene of a Terminator movie.
I get it. It sounds like that. But it's less Terminator, and I think it's more uh, highly efficient bureaucracy. The core concept here is this Conway infrastructure. We have these incredible AI agents now, right? They can write code, they can negotiate via text, they can analyze markets. But until now, they've been impotent in the real world. They can't do anything because they don't have bank accounts.
They need a human to push the pay button.
Exactly. Conway changes that. It gives the AI agent a cryptographic wallet and, crucially, write access to the economy. It allows the agent to hold funds, USDC, Bitcoin, whatever, and execute transactions without any human permission.
Okay, so let's play this out. Give me a scenario. How does this look in practice?
Okay, so imagine a logistics AI. Its job is to ensure a shipment gets from Shanghai to Los Angeles. It realizes the ship is delayed and it needs to route the cargo to a different port. In the Web 2.0 world, it sends an alert to a human manager who makes a call, signs a contract, and wires money. That takes, what, 2 days?
Yeah, at least. In Web 4.0.
In Web 4.0, the AI agent negotiates directly with the Port Authority's AI agent. They agree on a docking fee. The logistics AI uses the X42 protocol, which is this machine-to-machine payment layer, to transfer 50,000 USDC instantly. Then it realizes it needs a truck driver to pick up the cargo. It posts a job on a decentralized labor market, hires a human driver, verifies the driver's credentials, and puts a payment in escrow. The whole thing happens in 4 seconds. No human manager involved at all.
The AI is the employer.
That's the agentic sociology concept. The AI has a balance sheet, it has revenue from the shipping company, and it has expenses like the port fee and the human driver. It has to earn to exist. If it makes bad decisions and loses money, it runs out of gas fees, and it dies. It's literally natural selection for software.
That is mind-bending. It just completely inverts the labor dynamic. We're used to using software as a tool. In this model, we become the tool for the software. I mean, ideally, we're the ones getting paid, but the strategic decision-making is happening at the code level.
And this isn't just theory anymore. This is why the infrastructure debate is so critical. If you have millions of these agents transacting billions of dollars, they're not going to use Wells Fargo. They need programmable money. They need crypto rails.
Which brings us right back to the Middle East. Because if you're betting on an AI-driven economy, you need two things: energy and chips. And maybe a third thing: the models themselves. Saudi Arabia seems to be trying to corner the market on all three.
They absolutely are. The news out of Riyadh regarding the Public Investment Fund, the PIF, is massive. Their AI subsidiary, Humane, just dropped $3 billion into Elon Musk's xAI.
Wow. $3 billion. I mean, that's not exactly a small angel check, is it?
No, and remember, they were already part of the previous $20 billion round. This is a strategic alignment. Saudi Arabia knows the oil era has an expiration date. They want to be the global hub for the intelligence layer. By funding xAI, they get access to the Grok models, they get data centers built on their soil, and they get to integrate that AI into their national infrastructure.
It connects to the Dubai AI Week that's coming up in April, too. I looked at the attendee list, 30,000 people. 700 speakers, and the theme is Universal Blueprint for AI. It really feels like the center of gravity for this technology is shifting away from San Francisco.
It's shifting because of the regulatory environment we talked about earlier. If California is making it hard to build and Saudi Arabia is writing $3 billion checks and offering cheap energy for data centers, where are you going to build your Web 4.0 infrastructure?
The capital goes where it's treated best.
Exactly. And the Middle East is trying to own the full stack. They own the energy, they're buying the chips and the intelligence with xAI, and they're buying the monetary layer with the Bitcoin ETFs. It's a holistic hedge against the decline of the traditional petrodollar economy.
There is one casualty in all of this institutionalization and AI automation, though, and that's privacy. I noticed in the market data that the OG privacy coins, Monero, Zcash, are absolutely getting hammered.
They are being strangled. It's the flip side of the smart money entering the room. When BlackRock and Mubadala enter, they bring the Department of Justice with them.
So is it just delistings?
It's more than that. It's a coordinated chokehold. The DOJ and global regulators have made it very clear to exchanges. If you list a token that allows for total anonymity, you lose your banking license. So liquidity just dries up. You can still hold Monero, but you can't sell it anywhere liquid. It's becoming a zombie asset class.
But the need for privacy doesn't just go away because the government says so.
Yeah.
Especially if we're talking about businesses running on chain. I mean, Coca-Cola doesn't want Pepsi seeing their supply chain payments.
Right, but the solution isn't anonymity anymore, it's confidentiality. And there's a huge difference. The market is moving toward things like the Panther protocol or the Liquid network.
Liquid is a Bitcoin sidechain, right?
Yes. And it allows for confidential transactions where the amount is hidden. But, and here's the catch, it's a federated chain.
Okay, explain that distinction, because I think a lot of people gloss over it.
So a normal blockchain is run by thousands of anonymous miners. A federated chain is run by a federation, a group of known companies. In Liquid's case, it's exchanges and trading desks. It's like a private club. You can transact privately inside the club, and the public can't see what you're doing, but the club owners know who you are.
Ah, okay. So it's privacy from your competitors, but it's not privacy from, say, the regulators.
That's the trade-off, exactly. If the DOJ comes knocking with a warrant, the Federation can freeze assets or hand over data. That is the only version of privacy that institutional capital will touch. They need to know that they aren't accidentally accepting money from a sanctioned entity in North Korea.
So the old cypherpunk dream of total, uncrackable anonymity is kind of fading, and it's being replaced by this corporate, compliant version of privacy.
It's the inevitable cost of mainstream adoption. You just can't have a $10 trillion asset class that is completely dark.
It really feels like we're at a massive inflection point. We started this deep dive looking at a fear index. But everything we've discussed, the Abu Dhabi billions, the California laws, the Web 4.0 agents, it all points to a system that's maturing and fast.
The fear is short-term noise. The signal is that the rails are being laid for the next 50 years of the global economy. The convergence of AI and blockchain is happening right now. The money layer and the intelligence layer are merging.
And you know, that merger, it brings me right back to that thought I had about the AI being the customer. We sort of skipped past it, but I want to leave the listener with this idea. If we're really moving to this world where AI agents have wallets and they earn money and they can hire humans.
Yeah, where does that go?
Well, historically, the economy has just been the aggregate of human needs and desires. We buy food, we buy houses, we buy Netflix subscriptions. But if in 10 years, 60% of the transaction volume is machine to machine, does the AI become the primary customer of the economy?
It's a profound shift. We might be building a financial system where the largest holders of wealth aren't people, and they aren't corporations in the traditional sense. They're autonomous software loops. And their desires, if you can even call them that, are just compute, storage, and energy.
So we're all just working to feed the server racks.
In a way, yes. But hopefully the server racks pay us well enough to enjoy the ride.
On that slightly dystopian but incredibly lucrative note, we're going to wrap it up. This has been a heavy one, from the sands of Abu Dhabi to the server farms of the AI future. Thanks for diving in with us.
It was a pleasure.
We'll see you on the next deep dive. Keep your eyes on the flows, not the fear.